every time Bitcoin is or new money comes into Bitcoin, Tether has to buy more treasuries because they have to back their tokens with dollars, but they don't back them with like dollar bills. They back them with US treasuries. So every time someone buys a Bitcoin, you're essentially financing the treasury debt, right? And spreading US inflation out into your bank account so that the dollar has more life to it. That's how it's working. But they can't do that with gold, because gold is the base of the dollar. It's not like Cantor Fitzgerald's going to go to a gold conference and say, well, yeah, Andy, we're going to offer you leverage on your gold coin. Like banks don't do that.
In today's news recap, silver price finally breaks free. In the early hours of the silver market on Monday, we have seen a lot of momentum, and as a result, it is worth noting that the silver market has cleared a major short-term barrier to perhaps run higher over the next few weeks. The silver market rallied significantly during the early hours on Monday, as we are now well above the $31.50 level, an area that I had been watching. We're also fairly well past the 50-day EMAs, and now it looks like we are starting to finally see some momentum coming into the market. Underneath the current trading area, we have the $30 level offering a massive floor in the market, and we had recently formed a bit of a double bottom. This is a good sign, and it's very likely that silver will find that as your hard floor going forward. There's also an uptrend line that supports silver, so the technical analysis all lines up for higher pricing. The question now will be about inflation in the United States. Will it work against silver? We'll see. But also, the silver market is also an industrial demand story as well. And if the economy really starts to take off in the US, silver demand could pick up there as well. So it's a bit of a cacophony of noise, if you will. Nonetheless, the simplest way to look at this chart is that we've been in an uptrend for quite some time. And now it looks like we're going to at least attempt to continue that uptrend. This uptrend is likely to be a bit surprising for some, but when you factor in the idea of the overall trend, as well as the idea that liquidity could drop in a week or so, things could get interesting. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button.
Long-term gold and silver, their purchasing power is going to go up and up and up. If you look at a chart of silver versus other commodities, or gold versus other commodities, gold has been outperforming other commodities for 20, 30 years now. It's going to keep going. That's what makes gold and silver a good money, is that it gradually rises in purchasing power over a very long period of time. Relative to stocks, I think gold and silver are going to go much, much higher. And because we're still pretty pathetic in gold versus the S&P 500, for example. And I think that once that ratio really starts to turn and head higher, then people with a whole bunch of stocks in their portfolios are going to realize that they're not really making money, because versus gold, they're not really performing. And if you look at a chart of the Dow and the S&P versus gold since 1971, it's pretty even. When gold is going to be it's not going to be reinstated. It's just going to be unearthed. Like, oh, that's what we're sitting on. We're sitting on, a big triangle of gold. That's what we're on. And with silver, that's a little bit of a special case, because with silver, that typically spikes to the historic monetary ratio of around 15-1 during monetary panics, when the dollar is no longer functioning, the dollar can no longer be exchanged for any amount of gold, then you can't buy anything with it. When you can't buy anything with dollars, you can't go into like a supermarket with a gold coin and say, give me a week's worth of groceries. You'll have to buy the whole store. So gold itself, physical gold, can't be very good for retail trade. If a gold derivative that divides gold, like a dollar bill, divides gold into now 2,653 pieces, right? If you don't have a functioning gold derivative, the only thing you can use is physical silver to divide gold. And so that's why the ratio goes to 15-1. So at the peak of the monetary panic, whenever it's going to be, there's going to be a window where silver to gold is 15-1. or gold to silver is 15 to 1. During that time, you want to spend your silver on anything you can get your hands on just to spread it around throughout the world to give this base of basic money to the public so that they don't starve. And it'll make us very rich, and it'll also save the world. So stack silver, get your friends to stack silver. It's even more important than gold in my view. And the more people that have a base amount of silver, even $1,000, $2,000 worth per person is more than enough to save the world from the worst of the end game. Then do it. We're laying out like a silver, like the firemen, people jumping out of buildings, and they put that trampoline down when you're jumping out of a burning building to save you. That's what we're doing, except
with money. In today's news recap, silver price rebounds off $30 and heads to $32 as USD retreats after weak US data. Silver has been showing resilience this week, climbing $1.50 with the USD dollar in retreat, supporting the bullish momentum we predicted on Monday. As the Federal Reserve prepares for its final rate hike of 2024, silver prices have dropped $5 from recent highs over the past 2 months. However, the metal has found strong support around the $30 level, with the 100 SMA on the daily chart acting as a key technical floor. Renewed buying interest in this zone has halted the sharp sell-off that ended late last week. Silver has shown signs of recovery this week with a hammer candlestick pattern, a classic bullish reversal signal emerging after the recent retreat. The upward momentum strengthened yesterday, fueled by weak U.S. economic data. The ISM Services Index revealed a sharper than expected contraction, reflecting cooling demand and employment in the services sector. Additionally, the ADP report highlighted slower job growth in both goods and services, signaling a softening labor market. The weakening economic data has eased concerns about aggressive monetary tightening, providing a boost to silver as a safe haven asset. With supportive technical indicators and shifting market sentiment, silver's outlook appears increasingly positive heading into the year's final stages. Silver declined to $30.43 yesterday, before stabilizing and climbing to $31.46, marking an intraday gain of approximately 1%. This movement reflects the interplay of global economic concerns and growing expectations for a U.S. interest rate cut. Amid economic uncertainty, safe haven assets like silver continue to attract investor interest. Market sentiment has shifted toward a higher probability of monetary easing, with a 75% chance now priced in for a 25 basis point rate cut in December, up from 70% following weaker than expected U.S. economic data. This expectation could further boost non-yielding assets such as silver, even as the Federal Reserve signals a longer-term policy of elevated interest rates, with only 2 modest cuts anticipated in 2025. Technically, silver faces resistance near the 31.70 level, where the 50-day SMA serves as a potential barrier for buyers aiming to extend the recent rally. Now we'll show